How are you, trendsetters? Welcome back to the Tax Champion. Good to have you along. Got a bit of a winter coat going here in more ways than one. A bit of the old comfort heating not helping too much. So, start of a new tax year, and which direction do we look? First things first, get your information from the Tax Champion about the Australian Tax Office. Yep, that monolith. They tell us what they're going to audit at the start of each year. And the tax office are absolutely focused on work-related deductions for individual tax returns. So obviously at the Tax Champion we're dealing with growing small businesses and all the pains and the fun that they endure, but they also all have to lodge an individual tax returns, and we also lodge quite a few individual returns on behalf of people as well. The tax office absolutely focused in this area. So why? The reason would be a lot of money. So they think they can find billions of dollars through work-related deductions by doing audit, and the Tax Champion tends to believe them. I think they'll find a huge amount of coin in this space. So they talk, the tax office, about random audits. So usually a little trendy word that my kids use, like random. The tax office are auditing in a way that's anything but random. Don't believe that word random, because like any massive organisation with a huge computer system, they know exactly where the money is and they know exactly where to audit. So what they do is they draw lines of amounts and industries through those work-related deductions. So for other work-related expenses, for example, they'll look at all of the people with, for example, more than $2,500 worth of other work-related expenses. They might choose some other threshold, but they draw a line through a certain threshold, the tax office, and they use basically the information coming out of there. They send letters out, and they are really going forward this year. Previous years, we'd have letters on behalf of our clients warning about work-related deductions, and that was a toothless tiger. They just send those letters out and there was not much in them. The world has changed with the tax office, because they are going to find billions. So when you're lodging your individual return, or before you even come into your tax accountant this year, you better have the receipts. If you've got a logbook for a car, you better have it 100%. And if you're claiming a lot in work-related deductions, they do have you in the gun, so to speak. A few months ago, I was talking to a top-level tax officer, and that person had the look in his eye and the determination and not far off anger about chasing work-related deductions, not unlike the Tax Champion getting upset at multinational corporate tax. So that was a high-level tax officer. The determination's there for the tax officer, so make sure you have all of your receipts and make sure that you're all ready to go when you lodge that individual return. Just as a final point, the tax office also just puts tax agents out of business. So if you're with a dodgy agent out there who's getting $2,000 refunds for every single client that walks through the door, that tax agent will be put out of business pretty quickly, because again, that huge computer system in there at the tax office just picks those sorts of things up, and they'll go over to the tax agent, pick out 10, 20 returns, and boom, they'll just put them out of business. So tax officers have got teeth this time, folks, for work-related deductions. Get them right and get ready. See you next time at the Tax Champion.